Hello everybody and welcome back. Well, I think for many traders and investors out there, you eventually have this aha moment where things just click and make more sense. 2022 so far has been a very tough year for many, and it's not due to not having opportunity or volatility. It's more an understanding of the markets. So we'll be deep diving into something that I believe was an aha moment for us, and we'll be talking about why it makes such a difference to your trading and investment journey. There's a lot to discuss, and I think you're going to enjoy it. See you soon. So let's begin today's video by talking about rotation and money flow. For anyone that's ever had access to a Bloomberg terminal or Reuters terminal, you would know that these little squiggly lines appear in that platform. But what do they really mean? Well, just before we dive into what they really mean, I would like to let everyone know that today's video is sponsored by Tiger Broker, and we'll be talking about that and a great offer for you, the community, a little bit later on. But let's get stuck into actually talking about this rotational flow. So first up, if we were to understand what market makers and really investors do, is they tend to push markets around and they tend to move them from area to area to area. And this becomes what we would call the four quadrants. We have the leading quadrants. Usually everyone knows of them at this stage. We have the declining quadrants, not where we want to be. That's when you're left holding the bag. Then we have the lagging or the fearful quadrant. Effectively, that's where the market is not very interested in it, or so they say. The composite man could be accumulating. And then we have the improving area. So as a trader and investor, ideally, we're somewhere here. But what will happen is as the spread of an idea or effectively the trend begins, the market will go in and it will start moving into this area, and it will keep moving in there possibly for days, weeks, or even months, or even years sometimes, depending on other parameters. And as it goes into leading, more and more people tend to recognize it. People like, of course, the news agents, and they start to post everywhere. Sometimes you might hear it, of course, not to pick on anyone, but Kramer might mention it. And then right at that point, when everyone's like, oh, look how good this is, it turns around and becomes a declining one. You're left holding the bags and you're left scratching your head saying, why did this just happen? Well, it's a multitude of different reasons, but the big one is, of course, funds need to be in performance. They need to beat the S&P 500. Now, there are some years that the market is literally flat or doesn't move that much, yet underlying, everything's moving around. So let's actually now go back to the charts and understand what's happened so far in 2022. And whether you're watching this video later on, this is still incredibly relevant. So let's talk about it from the perspective of what's actually occurred year to date so far. We've seen some sectors outperform. Energy's had clear rotation into it. We've also got metals that's had clear rotation into it. We'll talk about that one a little bit later because that was a spread of the idea that then got sold off. And we've also got some defensive sectors, utilities, gold, and staples. They've all done better than the horror shows that have unfortunately been what many retail traders have been in for a long time: semiconductors, consumer discretionary, those types of areas. So if you look at this over a longer stretch, you might think, well, of course, that's clear. But there are certain times when holding these hyper stocks or holding clean energy, holding TAN, solar has been amazing. There are certain times when tech outperforms and then it gets rotated out of. And what ends up happening is other sectors take over. Back in November 2020, no one wanted energy. Yet energy started becoming the outperformance sector that if you'd been predominantly bullish and long in, you would have done very well. You would have also outstripped the S&P 500 and NASDAQ over that time. And it's not just these sectors. There's so many sub-sectors and so many day trading plans that you can build around this concept. So let's just talk about day trading in general. How do you even approach the market during the day? Well, a lot of people look at it and they go, okay, I'm going to go look at the S&P 500, Russell, Dow, and NASDAQ. There's nothing wrong with that. Of course, it's a great plan. But what you could also do is say, okay, well, if the market starts turning around, let's say I see and I spot the S&P 500 turning up, which sector or which area might outperform the overall broader market? Well, one of the ways you can get that hint is by taking a look at the performance for the session so far. You'll notice here in this particular day, which is taken the day before this recording, we had a very clear standout in the morning. PBW, clean energy, and solar. Both of those did incredibly well. Now, what might surprise you is when you actually go and you pull the last 5 days of data. In fact, every single one of the last 5 days one of the leading ones has been clean energy, and another one that's come through and shone through, which is consumer discretionary. This is something we've discussed on our channel as well a few times. Consumer discretionary showing us that risk is on. Clean energy obviously being the hyper kind of risk version of that. So for the last 5 days, rotation has generally been in this sector, and it's performed very well during the up days. Of course, during the down days it has dropped, but during the up days it's performed exceptionally well. So before we take a deeper dive into money flow and sector rotation, I'd just like to take a quick moment to mention the sponsor of this video, which is Tiger Brokers. Tiger Brokers have currently partnered with us to do a special deal for Australian users out there in our community. And if you're interested in signing up with Tiger Brokers and getting this platform and more, you can click the link in the description down below and find out all the extra bonuses that you can get. We did find an exclusive one for you, so check it out and hopefully you enjoy Tiger Brokers. So let's jump into the platform here, which is Tiger Brokers platform, and talk more about rotation and how money really flows through this system. So firstly, here's 50 different sectors in the market. Now, as the market opens, you'll see these all start to light up. And of course, there were some to be in yesterday and some certainly not to be in the sessions. Some of the ones that I think, a lot of people wouldn't look at was necessarily things like application software, hypermarkets and supercenters, and of course, hotel resorts and cruise liners. They were some of the best performing ones. Also, interactive media and services. So when we scroll across to the industries, and you look at all the industries here on the left-hand side, there's a whole bunch of different stocks and sectors out there within the S&P 500, which are doing well over different times. Now, you've already seen the main ones and how they've gone, but what if you were to bring up percentage changes over the last 5 days? Well, if we click here, you can see here, internet and direct marketing, 17% over the last couple of days, 5-day interim. We already know it had one of the best days over the last 24 hours, but this had already been flowing and happening for a while. There were others as well, silver having a massive breakout and movement, copper having a massive breakout and movement, and being able to spot this within a platform is really helpful. Then you can click on one, let's say click on copper, and you'll notice the 4 top stocks here. These are the biggest stocks. You can even go over and load up market capitalization size. So we can scroll over here and have a look at the actual market size of all these stocks, float caps. And that will help us to maybe make a decision of whether we want to jump into these on the charts and then look at them in greater detail. So that's something you can do in the Tiger Broker platform, and it's super helpful for understanding not only the sectors, but the subsectors that are doing well on the day. And then you can potentially trade that flow and trade that movement throughout the session. If you're ever wondering what's going well, this is a good way of checking it out. So let's jump in and talk about the VIX now and fear in general. So when there's a lot of volatility, such as there's been in 2020 and of course 2022 so far, when the VIX is really high, certain things become much hotter. So what is going to do well in high VIX environments? Well, if you understand inflation, of course, the inflation stocks might do well. But on top of that, the defensive sectors, utilities, staples, all of those tend to hold up and do better throughout that time. As the VIX drops, what does that mean? Well, we might see risk on in the markets. Effectively, the other sectors start to perform better. Consumer discretionary and all of those sites are ones tend to do better and perform. And of course, when the VIX jumps underneath 20, what happens? Well, we enter a standardized market. And during that time, it might seem at the surface that the markets are boring. So how do you get superior returns? How do these money markets work? Well, as we said, it's all about these quads. The money flow will continue to happen. It's just that it'll be under the hood. It won't show necessarily on every single day in the S&P 500. It will be happening in the sectors and those specific stock sizes and areas. So it's certainly worthwhile looking for that rotation. If we jump over to what's happened in 2022 so far, a lot of you might think, wow, how did I miss this one? And fair enough, of course, it was a very big distribution that ended up being accumulation and it broke out. But what might surprise you is the time it broke out and how it broke out. So you might think, well, of course, this broke out due to the stuff that's going on in the Ukraine and Russia. But actually, it broke out around the 10th of Feb. And it really started in the back end of January into February. And that's when we saw that huge movement. But there's been multitudes of trades here. This is a point of resistance, or also known as demand after it broke through. And the market recently fell through all the way back down. Now, funnily enough, what was everybody talking about up here? Everyone suddenly caught on to the metals concept. Oh, I've got to buy metals. Oh, I've got to be in this and that. And it drops off significantly, falling to a level where you could then potentially look to pick it back up. And the relative performance since the middle of May has been amazing, 17% in this sector alone. And that's only in the sector. What if you were able to drive into the stocks underneath it and do even better? Gold's been another standout, having some really nice sessions on it. A little bit of a Wyckoff, as many of you would know down here, a breach of the downward trend line, and then of course a rally through. That's why, it pays to look at some of these. But another thing that you can look at is defensives. What about utilities? Has that done well? Well, utilities has held amazingly for 2022 so far, with some really nice breakouts, some really nice trades, and of course, it's just another one that you could bring into your arsenal. Now, we also talk a lot about XLY, XLP, and I thought it might be good just to quickly talk about this being risk on and risk off for the markets. It's a good way of just seeing whether you want to be more in the defensive money flow or you want to be more in the risk on money flow in terms of sectors and rotation, or what the actual market's doing. And for pretty much all of 2022, except for that March into April period, and right now where we are at the time of this recording, you really didn't want to be in the aggressive sectors. You wanted to be in other areas. And because for so long the aggressive sectors have held up, if you think about the last decade, we became used to just chasing technology. But technology and consumer discretionary is not always best. There are times where these other sectors become relative better performance. During 2018, up until the pandemic, the end of a cycle, we went actually more defensive in the market. During a period over here in the middle of 2021, contrary to popular belief, we went into a defensive area of the market. And we had some nice breakouts, of course, ahead of the crash, but all of 2022 has mostly been risk off. And this is just a great chart to show you that. So quick shout out just again to Tiger Broker. Click out the links down in the description below if you want to. And of course, if you're from Australia, you might want to check out that special offer and get that Apple stock and all of the other little bonuses that you can get there. Thanks so much for watching. Subscribe if you enjoyed the content. We'll see you in the next video. Bye for now.